Welcome back. I'm Brandon, the HBAR Bull. I do some work for the HBAR Foundation, but for this interview, the opinions expressed are only those of my guest and I. Today, we welcome John Wingate, the CEO of BankSocial, to learn how they're trying to upend the loan industry. Welcome, John.
Hey, thank you, Brandon.
Yeah, okay, to kick it off, John, let's just give a quick history of BankSocial.
We started about a year ago. It was we really came at it from the perspective of how do we, open up the financial system from the perspective of allowing just anybody who wants to participate in kind of decentralized lending. The problem with the traditional decentralized lending market, or I say traditional, what's available right now in decentralized lending is it's really just put your Bitcoin up at a pretty bad ratio. And then, somebody will lend you that money. And so there's no asset, there's no collateral except for the Bitcoin. And then it's volatile asset. It's much more volatile than something like real estate, for example. And so coming from the real estate industry, I said, we could do something that would be the first to collateralize assets with a DAO and allow just everyday normal people to participate in a decentralized lending against assets, which are typically less volatile than, something like Terra, Luna, and the whole UST debacle.
Sure.
So we got into doing that. We're, as you could tell from our chat a week or so ago on Hedera, we're more leaning towards how do we do this in a regulatory compliant manner in all facets. And so we've taken a little bit longer with the community, with building out our DAO in Wyoming. And then, we've also got our exchange that's coming online, fully compliant in the United States, and then a couple other places around the world. So it's taken us, I think we're still moving faster than almost all these other projects out there. And we're actually doing something relative to what these other guys are saying they're going to be doing and not doing. So it's been a great ride.
So can you take us through the nuts and bolts of how you actually apply for a loan or how you apply for the funding?
Yeah, absolutely. So we have on the BankSocial website, there's a loans.banksocial.io. The loan comes in, you specify what type of loan, how much you're looking for, and then that goes to the delegates. So the community has elected a group of delegates that can be changed at any given point. They have the community has full, capacity to do that. And then the loan gets approved typically within, 24 to 48 hours. If there's any questions, they'll ask. That's the other thing too, is that because it's asset backed and we're only doing loans to businesses right now.
Okay.
So for construction, fix and flip, things like that. And so the turnaround's real quick. And then once the funds are approved, they pick a title company and we send the funds to the title company. It's done.
Oh, wow. Easy enough. So how exactly does Hedera fit into this? How do you utilize Hedera?
Okay. So we've been looking for, the whole deal here that really doesn't work is most of the funds that you're utilizing for this are Ethereum, BNB. They're these fluctuating assets. And so no title company is going to take that, at least not right now. We are working on a company called Chain Title that's going to do that. Right now, though, even Chain Title would need to convert that to a fiat or to something stable. And so we looked around. We're not really happy with any of the stable coin products that are out there. And so when we came to Hedera, the goal was twofold. So first it was, how do we allow our community to, there's a staking component to our token. And so how do we allow our community the ability to stake into a trusted system? So when you receive proceeds from a loan distribution, we feel like that, there's some regulatory compliance that needs to happen around the income and knowing who that money's going to and all that. And so when we looked at the various chains out there, it's either you build a lot of that on your own, or you can use HTS, which has the majority of that, the base functionality there for controlling wallets, ensuring that, that the KYC is done on those wallets, the ability to revert those wallets if something gets compromised on them. There's a whole bunch of features that's baked into HTS that when we looked at it and we met with the development group, we said, wow, this is great. And so as we started looking at that, the the other challenge was we're not from the stablecoin side, when the payouts happen, it can't be something that costs, if somebody's trying to cash out $10 of interest or $25 of interest, you can't, if it's on Ethereum, you can't do that.
Sure.
I mean, you can't do it. And so we started looking at it from all these different aspects. And when we landed on it, we saw it was really the perfect mix of, and let me step back and not use the word perfect. It was the best available mix out in the market for security, the ability to KYC AML, and then the fee structure. And really I'm a fan of the centralization component of what Hedera is doing. So you have trusted companies that are decentralized. So the network is still decentralized. It's just done in a manner that is, to me, more secure. So when you're talking about something that really is looking to play in the space of regulated industries, I think you have to be looking at these feature sets that Hedera offers, and then looking at the companies that are backing the validator network. And then there's a lot of security in knowing that the likelihood that it's going to be there for a long, long time and be uncompromised for a long, long time is extremely high because of that ecosystem. It's still decentralized though, so that in the event that, I mean, how many validators are there now, or companies? Like 30?
There's 26. Yeah.
26. Yeah. So right, coming up on 30. And so, I mean, losing, a third of them isn't going to do anything to the network. And so, you kind of look at how BNB operates and how, Solana operate, where they also select who can be a validator. It's a little more obscure. It's kind of obfuscated. You don't know who those people are. So when you kind of look at all that, and now you're talking about, I'm hesitant to talk about what we're really doing on Hedera.
Oh, there's more. That's all right. Some stuff has to stay behind the scenes.
There's a lot more. So it comes back down to, we are looking to create a stable coin that is able to be used by financial institutions. And we found that Hedera is really the best place to do this at the end of the day. And then how BankSocial plugs into that is we have an immediate need for our lending components and our payback components to happen through a one-to-one backed, verified. None of this, it's funny when Enron went down. I'll just throw that example out there because I'm quite familiar with it. When Enron went down, they had Arthur Andersen, one of the largest accounting firms in the world, was doing their books, and they were involved. It was all collusion. Mm-hmm. And so, we've got the opportunity now in this new decentralized and distributed ledger, open ledger world to remove a lot of that, those questions, right? And because the ledgers are distributed and maintained by third parties, the opportunity for collusion is, almost zero. I don't think we can say zero. Some mathematicians may get on us for that, or some computer scientists may get on us for that. Certainly, though, tremendously less, orders of magnitude, not just an order of magnitude. I would venture to say, orders of magnitude less than your traditional CPA or accounting style, centralized accounting ledger that you would have. So yeah, and we could get into it a little bit more. I'm sure we will.
Yeah. So, but you're absolutely right. When these huge corporations, Google and Deutsche Telekom and IBM, and they're more concerned about their traditional businesses. They're concerned about their brands. They're not going to do anything, collude to do something nefarious to benefit from doing something wrong on the network. So no, it makes perfect sense to me.
It's all open ledger too. Even if they did, it's open ledger, we would all be able to see it. So, you got to think about, there's multiple factors working here in Hedera that really make it a great ecosystem for, trusted, verifiable, regulatable, if that's a word, regulatable, infrastructure, that's decentralized. And so I think, of all the, distributed ledgers, Hedera has really, in my mind, and I've watched it for several years. I've been in this since early 2010. So in the whole crypto space with Bitcoin. So, friends of mine, they don't understand the difference between blockchain. I'm a computer science major by schooling and before schooling, just loving computers. and they don't understand the difference between, the whole distributed ledger and then blockchain as a type of distributed ledger.
Mm-hmm.
So, I really think that Hedera has a great place in the regulated economy, which I think we're going to see a lot more, not necessarily legislation, regulation coming up, where more guidance is being offered, put out there by the, by the 3 and 4 letter acronym government entities around the world. And then that'll turn into where can we best live? And I think Hedera is well primed for that, for all those reasons we just discussed.
Yeah, I think the executive order that came out, I think that was a positive thing. We need the regulation in the space, and I think we're going to get it.
Well, and if you look, just last week, the NCUA, which is the National Credit Union Association, they came out with, and they're essentially the FDIC for credit unions. They came out with guidance that we talked it's maybe about a month ago, and I stressed with them, I said, please don't come out and do a bunch of guidance that just uses the word blockchain. What you're going to do is you're going to end up, putting Bitcoin at the front, and really you can't do anything with Bitcoin. You can't build on top of Bitcoin. I see all these people saying, oh, you can build on Bitcoin. No, all you're doing is you're creating another chain, or you're creating another distributed ledger. It's just like Ethereum. It's just like Hedera. And then you pass the tokens back and forth. So, I told them, and then they came out with some great guidance that essentially, opened up the world to say, look, distributed ledgers, don't focus on blockchain. Don't focus on Bitcoin. Don't focus on Ethereum. Don't focus on any one. Look at these for what they are. They're distributed ledgers. And at the end of the day, your consumer, your customer, your member, your client, whatever you want to call them, they may not even need to know that they're using it. Mm-hmm. They just gain the benefit of it's cheaper, faster, more secure, requires less accounting, requires less overhead, operational cost, and they get the benefit of that in reduced costs, reduced operation, faster transactions, more worldwide availability, all the reasons why, it's something you can use. They don't even have to know they're using it, though.
Sure.
So that's really what we're focused on. Like, I think the biggest key to wide adoption is you have to obfuscate away like what you're doing and how it's being done. Because people don't want to go and learn how to download a wallet and get their wallet address and, learn that they need to rotate their wallets and their keys. And they just don't want to learn to do all that. And I don't blame them. We have to make it easier for people.
Yeah. Well, that's what Rob Allen said. Sharky Rob, he's one of the greatest people in our ecosystem. He said, all companies are going to use Hedera. They just won't know it. It's all going to be on the back end.
Right, exactly. And so, that's really the key piece that we're going for right now, is by creating, and I'll talk about it a little bit, because we're in the final stages of where we're going to be coming out and doing some public announcements on it. I won't say names of what we're doing is, but the opportunity to create a one-to-one backed, verifiable, government approved, government insured stablecoin would be a first. It is going to be the first of its kind. And then when you have that as the settlement layer, because it's hard to settle in Bitcoins right now. Certainly the concept is there. Like, hey, would you take one Bitcoin? Yes, I would take one Bitcoin. What's the value there? It's really, whatever two people will agree upon. And that's it's hard to do in these fast moving, trillions of dollars per day, economic models. So you really need a way to peg against, and the dollar has just been traditionally the best way. And if we look further at kind of the dollar's dominance, I did a post a couple months back where I said the smartest thing that the US government could do right now is, instead of creating its own stable coin, say that dollar backed, dollar pegged, as long as they're verifiably pegged one-to-one and they're not, fractional. Essentially, don't fractionalize the fractionalized reserve. That would be terrible for us. As long as they're pegged one-to-one, then they're really just a settlement layer. Sure. They're no different than a settlement layer. And by doing that and allowing for, the world to now transact more easily with the dollar as the peg, I think you stabilize or at least you put the dollar in a position to live longer than it would otherwise, just in the current state that it is. will they do that? I think they're seriously considering it. I think that, for the government to go into CDBC and try to create their own central bank digital currencies, they could do it. I think they could do it very easily. It's already close.
Yeah.
What are they doing right now?
Yeah. So that's my question. So USDC is on one side of the spectrum. You have UST, which completely collapsed to an algorithmic stable coin, and they've always collapsed. In the middle of the road, you have some backing with Tether. We don't really know how much, but then we have USDC that is pretty much 100% backed either with US dollars or short-term treasuries. What's the difference with what you're trying to do? Is it because it's a commercial bank stable coin, or is it because it's governmentally insured? What along those lines? What's going to differ what you're doing from USDC?
So USDC, as far as I know, it's it's verified by third parties. So yes, a certain number of the dollars that come into that are in different types of government yielding instruments, assets. The vast majority of it though is not. And so without giving away a lot of what we're doing, we would be one for one verifiably, with very little external audit required, be able to prove that one for one with the government standing behind it, that it's all there. And I think that's more important than anything right now, especially with the current state of regulation. Having governments essentially be a part of this without creating a CDBC and without creating this, created by the government type of token. I think it's very important. And again, it comes back to, it's really just, when you look at it, it's a settlement layer. As long as you're not fractionalizing the asset, it's a settlement layer.
Yeah. Makes sense to me. So you mentioned that Twitter Spaces, and one of the things that you said in that Twitter Spaces, well, there may be some emerging technology that is superior in some way, and I think you were referring to compared to Hedera. Were you just talking about like a hypothetical network, or were you talking about something that's actually out there? Because as I understand it, Hashgraph and in turn Hedera, pretty much hits the limits of what's possible with a DLT network.
I because I've been in technology since, it kind of became mainstream back in the late 80s and early 90s. I picked it up very early as a kid, when it first became consumerized. And I would just be hesitant from that perspective to ever put a limitation on what we say is like, we're here, we've reached the pinnacle. Yeah. And so I think right now, the cool thing about where we're at, and this is where I think Bitcoin falls a little short. I'm not saying that this is its demise. Certainly, though, if we look back at history, this has been the demise of product and companies, is not innovating. And so what I like about Hedera versus something like a Bitcoin is that Hedera is pushing the innovation spectrum, and it's got centralized parties involved who, it's in their best interest to continue to upgrade, provide the best support, provide the best set of libraries. I mean, Hedera's libraries right now are unmatched as far as the amount of support and the amount of code that's just in place. Different, they've got SDKs for all the main languages out there. And so when you look at that type of institutional support with a distributed ledger that's free for anybody to use, it's really hard to compete with that. I'm not aware of any other, distributed ledger that's even come close to having an ecosystem like what Hedera has built out. And so, but I would just also, say that I'm hesitant to say that it can never be beat just because technology is technology. And it's quite possible. It does have, to me, the best position now. And for longevity, look at how long IBM's been around. They continue to innovate, they continue to evolve, and they continue to keep themselves relevant. And look at Hewlett Packard. I mean, they don't have the same relevance as that they once did. And I mean, there's a lot of companies we could say that about. And, what it comes down to in the end is, is the company set up? Does it have the right ethos within itself to understand that innovation has to be a consistent focus?
Yeah.
And I see Hedera as having set the groundwork, the framework, and then the ethos within its ecosystem to say that we're here to continue to push the limits and the edge of what distributed ledger technology can do.
I gotcha. I gotcha. So when you look at the landscape of DLT networks that are currently on the market, do you think the market is generally missing anything when it evaluates Hedera?
I think that that's a great question. I've only just recently kind of started seeing about, the community behind Hedera, and it's a great community. I think it's one of the probably most educated communities that I've met so far out there. I think that it's also, if I'm not mistaken, one of the newer ones to come. And I think there's a misconception just from being, formally being on the outside looking in about, centralization versus decentralization. And, it doesn't have an exchange like Binance. There are certain things that just from a visibility and a marketing perspective, if we're just purely talking about the tech and the way people, I think our biggest problem in this space is we have a lot of people who don't understand the tech and they're just in it to make quick buck. Like the vast majority of the people here are in it for that. I'm not worried about that because I don't see that as the long-term viability of any network. The long-term viability is going to be people building applications on it that other people don't have to know about. And so if we just compare it like to BNB, for example, and we say, okay, Binance Smart Chain, there are no SDKs that are readily available that are built by the people building the network. And that's a tremendous, downside to being on something like Binance. And you can say the same thing about Ethereum. And so when you look at kind of the institutional support that's available, I think that there's just, it's kind of like the early days of app development. I was talking with Becky, she's my partner in this new stablecoin thing. It's like the early days of app development when you had, the first apps that came out on the App Store were like the cheesiest games you could ever think about. And people were like, oh my God, this is pure magic. How did they do this? And now we look back at those games, we're like, those were, they're trash. I wouldn't even put them on my phone anymore. And I think we're at that fork in the road where the networks that are providing the ability to build on top of the network, specifically like what Hedera is doing. I don't know that there are really any other networks providing that same institutional grade support and backbone. That once these companies start seeing like, hey, we need to, a lot of companies are talking about building their own blockchains too. I'm like, oh my God, okay, go tackle that if you want to.
Sure.
And then what they do is they just fork off something and they, create a new, look at almost 80% of the chains out there are forks of Ethereum or something,
JP Morgan coin. Yep.
Avalanche. And there's just, it's all over the place. Binance, they're all just kind of forks. And then at the end of the day, you have to look and say, well, what do I really need here as a company who's building either as a middleware type builder or as I need something that's secure, right? I need something that's well documented that can plug into a lot of language that's already got kind of the infrastructure there that I can build on top of. And then I need something that's going to have a, long projection because there are companies behind it that are interested in its long-term viability. Yeah. And when you look at the landscape, there's nothing else that exists with that criteria. And so what I think is going to happen is the same way with app development. When you had app development, you looked out there weren't any developers out there to build apps. There was everybody just learning. And then after 5-6 years, you had the ability for the development pool opened up. You had a lot more availability of developers who actually knew what they were doing. And that's when you started to see the sophistication rise. And I think we're right there. Most of these distributed ledgers are coming up on 5-6 years old at this point. And so that's really when I think you see, you just look at any company. Companies, it's very rare for a 1-year-old, 2-year-old company to go parabolic. Most of the time it's companies 3, 4, 5 years old, and then they get traction, they find product market fit, and then they go.
That's what we're going for. So, to bring it back to the banking and loans aspect of this, what impacts do you think DLT and Hedera will have on your industry in general?
Well, one thing that we looked at from when we were looking at this with regards to bringing credit unions into the fold is, the KYC and the control over wallets, who can even have the token in their wallet, being able to pre-vet wallets. When we looked at all that, and then of course there's the fee structure, there's the validator structure, which we're also looking to become a validator.
Okay.
So we're really committing. We feel like, at this point with where Hedera is in its evolution, we feel like it's got such a long-term viability ahead of it that we want to be a part of it long term. And so when we look at the credit union ecosystem, we need all those components, whether we go build them on top of Binance or on top of Ethereum and spend, hundreds of thousands of dollars building it, or we come into Hedera and say it's already majority here. We just need to wrap some interfaces around it. Oh, and you already have the SDKs that we just really all we're doing is wrapping interfaces around it at that point with some very loose connectivity with the SDKs. It makes wrapping up or ramping up pilot and phase one, and then very quickly morphing that into viable product for these large institutions that are moving tremendous amounts of finance. They're not going to do it. I can guarantee you they're not going to do it on Ethereum. And that's been one of our biggest problems is when you go in and you talk about building something on Ethereum, you're literally building everything. You have to build everything. And with Hedera, you don't really have to build everything. What you need to do is take care of the interface to the user. And that could be many different ways. It could be computers interfacing with each other. It can be people interfacing with computers, or, vice versa, computers interfacing with people. And so it really gave, when we looked at how, trade finance works, because some of this stuff is, it's automated. So there are, bots out there looking for trade finance deals that they can make the points that they want to make on, that have a certain yield over a certain percentage of time with a certain IRR, and then they just execute. And so when you start looking at all these opportunities, you've got to build on something. I'm not going to say the name of the company. I'll try to not say as much as I can about it. Their problem essentially was they did everything we just talked about not needing to do on Hedera. They went and they built their own blockchain, and then they had this super complex trade finance ecosystem. And so in the midst of building the blockchain and the trade finance ecosystem and getting the client, I mean, you're talking about a major push. And when we were talking to our advisory board, they brought that up as hey, why did these guys fail? And I looked at, the first two sentences and I said, well, look, they raised $6 million and now they need another $9 million and they still don't have a product. Why are you building your own blockchain at this point? And so, I really don't feel that there's another ecosystem that would forget about just speed to market, the security of being in an ecosystem and in a market. I don't think there's anything else that would allow us to do this and it be inherently built into the ecosystem so that and it's being used a lot. It's not just us building on. I mean, there's a certain, when you start talking to credit unions specifically, because they're financial institutions and they're member driven financial institutions, they like to be very rightfully so selective in the ecosystems, the software, everything that they buy, because one mistake, they're already operating at a very low margin, a very low overhead, and they can't afford to make mistakes that cost them a lot of money. And so when you look at going with something that you're going to have to, it's a clean slate, Ethereum, you've got Solidity, you're going to have to build every layer on top of that, including all the smart contracts, because probably most of that's not built out. And you look at that and you do a comparison, and then you look on the other side and you see Hedera and you see the HTS, that's already available for you to build on top of with the SDKs. You say, okay, look, there are thousands and thousands of transactions that are being processed every few minutes, every hour, that are utilizing these technologies. They're verifiable already. We don't have to go risk risk a lot of capital and time into figuring out if we can build that over here, just so that we can build something on, some other chain. We've got it,
Sure.
and then, So I don't know if that answers the question, but that's
No, it's good. It's good.
okay.
Yeah, I'm just curious how things are going to change for banking. But John, thank you so much for giving your time today. Do you have any final thoughts you'd like to pass on before we let you go?
I think that I would encourage, if you're not in the Hedera, probably most of the people listening to this are in the Hedera ecosystem already. I think that, if you are, you certainly are in the right place long term. I think where big industry is going to end up settling on, for all the reasons we discussed. If you're not, I would suggest that you get informed on exactly what Hedera is, or the high level concept of what Hedera has and what Hedera does and who's involved with Hedera. Just because, I think that having that knowledge will paint an entirely new picture of the capability and capacity that Hedera has over all these other distributed ledger networks.
Good stuff, John. Thank you again for coming, and good luck with BankSocial.
Thank you so much.